Good afternoon, one and all. I, C. Akshay Tambe, on behalf of the Professional Development Committee of the Institute of Chartered Accountants of India, would like to welcome C. Mangesh Kinare, Chairman of the Professional Development Committee. Welcome, sir.
Thank you. Thank you.
Now, I would like to request C. Mangesh Kinare, the Chairman of the PDC, to please give the welcome address, sir.
Yeah, thank you, Akshay. Good afternoon, everyone. Welcome to this another webinar of Professional Development Committee under its series PDC's DNA, that is discovering new avenues. Today, this series was started in this year with an objective of having exploring new opportunities for chartered accountant, helping them out in understanding the nuances of a different new areas, so that our chartered accountants can venture into these new areas in addition to our routine practice areas. I think we have around 7 to 8 sessions so far in this, and I think today we are going to have session on latest trends in insurance industry and opportunities for chartered accountant. We are here. We are also having with us our faculty for this session, CA Dr. Rakesh Agarwalji, who has been a co-opted member of Professional Development Committee and has been contributing a lot in this regard as far as insurance sector is concerned to the Professional Development Committee. Friends, PDC has been a catalyst in different aspects of professional development. Discovering new avenues, made for knowledge updates, and continuously, and this year also, we have been striving to reach out to maximum number of members. Our MEF is almost final now, and it will be submitted in few days' time to the Reserve Bank of India. This year, we are actually advancing. We are actually doing it in advance. Certain issues have been faced. We are trying to iron it out, and I appeal to the members that go by the spirit of whatever the members to apply through these panels, so that these panels can be distributed and circulated to more and more authorities. We are approaching many authorities for new avenues. As has been mentioned earlier also, we have approached the postal department, we have approached the cooperative, central cooperative department, and so on and so forth. So we have been taking efforts, and we are now already, council has passed the agenda for professional development regions. Of course, we'll have new opportunities for chartered accountants. Insurance sector is one such sector where there are numerous opportunities are there. And after opening up of that sector in India, we are having a lot of new avenues in the insurance sector. I think Mr. Dr. C.A. renowned person in that. Rightly, he will guide us today regarding the latest trends and new avenues. And I'm pretty sure that this session also, as has been the earlier sessions, and we are getting very good feedbacks about the earlier sessions also. So this session will also help our chartered accountants to venture into these new avenues. So I again thank you all for attending this. I welcome you all. I welcome Rakesh ji. I welcome Akshay also. And the PDC Secretariat, led by, as far as webinars are concerned, Priya, they have been taking great efforts. So thank you all and welcome to you all. Over to you, Akshay, again. Thanks a lot.
Thank you, sir. Thanks a lot. I would now like to welcome our speaker for the evening, CA Dr. Rakesh Agarwal, sir. Actually, he had a medical emergency just yesterday. There was some issue, but he has taken his valuable time out just for us. So many thanks to you, sir. I would like to take this opportunity to introduce CA Dr. Rakesh Agarwal, sir. CA Dr. Rakesh Agarwal has extensive expertise in insurance, risk management, and financial consulting since the past 30 years. A fellow member of the Institute of Chartered Accountants of India and the Insurance Institute of India, Dr. Agarwal holds a directorate in risk management, law, and MBA degree, post-graduation in journalism and mass communication, and is also DISA qualified. Beyond his professional practice, Dr. Agarwal is a prominent thought leader, contributing as the editor of the leading Indian journals, including the Insurance Times, Banking Finance, monthly journals being published since the last 4 decades. Dr. Agarwal has written over 30 books and numerous books on and guides on insurance addressing key industry topics and trends. As the Secretary General of the Risk Management Association of India and the Insurance Consumer Forum of India, he plays a pivotal role in promoting public awareness, advocacy, and education within the insurance sector. Dr. Agarwal's expertise, leadership, and contributions have made him a distinguished figure in the fields of risk management and insurance, driving impactful change across the industry. I would now request CA Dr. Rakesh Agarwal, sir, to please take charge.
Thank you, Akshayji. Thank you, Mangeshji. Can I just share the screen?
Yes, sir, please.
Priya, screen sharing, huh?
It's visible, sir.
Yeah, I hope you can see it.
Yes, sir. Perfect.
Yes, Rakesh.
So, good evening, everyone. So, I'm very happy to have this opportunity to discuss such an important and dynamic topic with you. The insurance industry in India is currently at a very fascinating juncture, experiencing rapid changes, growth, digital transformation, and regulatory evolution, you can say. So, this present time offers not only an incredible array of opportunities for professionals like chartered accountants, but but gives a lot of food for thought how we can explore in this insurance domain. So today we will explore how insurance sector is adapting to the emerging trends like digitization, the rise of insurtech companies, principle-based regulation, and the growth emphasis on risk management. We will also discuss about these developments, which are creating new roles for CAs, ranging from compliance and regulatory advisory to technology-driven solutions and fraud detection. So it is very important to understand the whole ecosystem of any industry to analyze the scope, challenges, and relevant opportunity. I believe the fraternity of chartered accountants are the they are best suited in this profession to explore the synergies of insurance industry. So before I start, I would like to thank the PDC Committee of Institute of Chartered Accountants of India for organizing this session and fostering discussions that prepare us for the evolving demands of the industry. Yeah. So to start with, this is a scenario of the current insurance space in India. So the Indian, is it coming?
The slide.
No, sir. The slides are not.
Change नहीं हुई है.
Just hold on.
Yeah.
Should I share it again then?
Yes, sir.
Is it coming now?
Yes.
Yes.
Okay.
So this is the current insurance space of insurance domain in India. So as you can see, that there are around total 73 insurance companies in India, including 26 life, 25 general, standalone health insurance, 12 reinsurance companies. So in this reinsurance companies, there is only one state Indian reinsurance company, and rest are representative offices which are registered in India. And we have two specialized insurers, one ECGC, which deals with domestic trade credit, and one agricultural insurance corporation. So all these players cater to this rapidly growing market in India, but still there is a huge scope of launch of new insurance companies. If you compare the scenario with the companies around in the SAARC countries, I think in Bangladesh only there are around 80 to 90 insurance companies, and in Nepal also it may be the number is quite good. So considering the Indian as a huge market, this number is still low. But now IIT is inviting license in different categories, and they are in fact uh, requesting this standalone health insurance companies and insurtech to take charge to expand the insurance market. If you see the total number of policy premium, so the life insurance market is huge. It is around 8 lakh 929,000 crores, whereas the general insurance market is lesser. So this difference is due to the investment part in the life insurance policies. So we have a term plus investment part. So the investments in life insurance is huge. Similarly, the total amount of claims paid was around 7,66,000 crores, and asset management total asset under management was around 67,57,000 crores. So if you see the numbers here, so the insurance premium in India is expected to rise at an average rate of 7.1 in real terms during the period 24 to 28. And the insurance market is projected to grow from 193 billion to 304 billion by 2031. So in the industry is growing at a CAGR of 9.9%, increasing from 3.35 trillion to 4.89 trillion by 2028. And this growth outlook is based on strong GDP growth, rising disposable income, and the best part is the young generation which we have in India. So that is also driving growth in terms of online sales and the retail space. If you see this is a scenario of the distribution channel currently in India. So in India currently we have around 49 lakh individual insurance agents, and we have 683 brokers and 25,000 IMF. IMF refers to insurance marketing firm. So just to give a brief detail about the distribution channel. So insurance brokers can conduct business all over India. They don't have any limitation. They can open office anywhere. Whereas IMF can open office for a particular region. For example, if a company IMF gets license for Bengal region, they can do business at a specific place. And then we have web aggregators. So web aggregators refer to the online platforms which offer this insurance comparison of premium. Corporate agent, again, any company can act as a corporate agent. So earlier, just last year, this corporate agents could do business only for 3 life, 3 non-life, and 3 health insurers. But to expand the capacity, recently IRD has increased the limit. So now this corporate agents can do business for or can be associated with around 9 health, 9 life, and 9 general insurance companies. And then we have this POS model. So what is POS? POS is actually again a line of stream created by IRDA, where people from rural area with minimum education can sell insurance, and they are mostly authorized to sell you can say retail lines of insurance in rural areas. So their enrollment procedure is very simple. Most of the brokers or aggregators, they have a mobile app, so they need to register there and go for the training, pass the exam, and they can directly sell the policies from their app itself. So this POSP channel is growing very, very fast in India, particularly in Tier 2 and Tier 3 cities. And government is also now focusing a lot on this micro insurance agents, and in order to increase the reach of inclusive insurance and micro insurance, So they are trying different ways to penetrate to the rural areas and tier 3, tier 2 cities. So if you see the chart, this is a distribution of life insurance offices in India. So if you see the chart, it is mostly concentrated in tier 1 cities. So now the aim of IRDA is to expand this the number of offices in different regions. So what they have done, they have assigned each insurance company with a different state. For example, Bajaj has been assigned with just for example, assigned for say Uttar Pradesh. So this company would be responsible for increasing the business and increasing the reach in that particular state. So the idea is so they can expand to this tier 2, 3, 4, 5 cities. So if you can see in tier 6, 5 and 6 cities, the number is very less. So to increase this, IRDA has allotted all the insurance companies with a particular state to increase the reach and penetration. This table shows you the penetration figures in India. In 2023, the total penetration in India was around 3.7%, and in the world, this figure is around 7%. And in terms of insurance density, it is again 95 in India and 89 around the world. So as you can see, the penetration in India is still very, very low in compared to other developed countries. And in fact, in the last annual report, I think in last 24, 25, 23, 24, this penetration has further reduced. So there has been a drop off, and I think 0.3%. So this is a cause of concern because unless we reach out, we increase our penetration and reach out to the masses, the benefit of insurance will not be reached. So for this, government is trying hard, and the insurance regulator IRDA, they are trying hard to formulate policies so that penetration can be increased, and people from rural blocks can be brought under the net of insurance. Again, as I said, the IRDA is trying hard to increase the penetration in the insurance industry. So IRDA has taken a mission, insurance for all by 2047. So IRDA has recommended that the whole of India should be covered by insurance by 2047. So for that, they are taking a lot of initiative to increase this penetration and reach to the objective. So the most relevant platform is this Bima Sugam. So this IRDA has had I think launched a few years back, 2-3 years back, and they have been delaying the launch of this platform. But in 2024 and mid of 2024, they have formed a separate company for Bima Sugam. So Bima Sugam is basically a digital platform which allows customers to compare, purchase, and manage policies seamlessly. So what will happen here? All insurers will come on a single platform, just like Policy Bazaar, the insurtech company. So this platform would be sponsored by the insurance regulator. So all intermediaries like insurers, policyholders, TPAs, or all the stakeholders will come under a single platform. So what will happen? The purchase cost would be lesser, transparency would be there, claim settlement would be faster. And in current scenario, I think the biggest pain point is the claim settlement and reply by the insurers. So this Bima Sugam plans to remove that hassle and give the customer more leeway in purchasing insurance and filing claims. Similarly, they are also launching a Bima Vistar. So again, this is a policy. It is a sort of combo policy which will cover all categories of insurance. For example, it will cover life, health, property, and it will not you can say it will offer a limited benefit and at a low price. Because if you go for a normal policy, it would be, if you take individually, it will be costly. So the idea behind this policy is that you can get a policy at a low cost and benefit of different policies at one place. Because usually insurance is not purchased in India, it is sold. So the idea is if insurance is made simple, then people can purchase the policy in more number. Again, third major initiative is Bima Vahak. So in Bima Vahak, a women-centric workforce will be prepared to educate rural households about insurance. So in this in Bima Vahak scheme, the idea is to engage the women folks. Why women folks? It is because they had a research that the women in terms of advisory services, they are very fruitful. So in terms of business also, they are doing very good. And so the idea is to reach out to the people through a women-led agency force so that they can reach out to the masses. So I think all the idea of all the initiatives is to simplify processes, increase insurance penetration, and address the unserved market. And I think for professionals, these initiatives open opportunities in IT integration, rural outreach programs, and operational efficiency. And in terms of detailed opportunity, we will come again later. As in fintech, you must be hearing about insurtech also. So fintechs are mostly focused on finance industry from banking and finance sector. And in insurance, we have insurtech. So the whole insurtech market is growing at the rate of, I think, CGR 31% digital, driven by digital adoption and rising insurance demand. So there are a lot of players in the insurance market in insurtech space. They are Policy Bazaar, Echo. You must have seen a lot of ads of Echo, Go Digit, then Turn. So these platforms are basically selling insurance policies. In terms of so insurtech companies are not only in selling insurance, so they are also into software domains, technical domains, offering APIs to various companies. So what is the benefit or use case of insurtech? So the basic idea is insurtech are simplifying insurance. So till now, what is happening? Insurance, everyone thinks that insurance is a very complex process. If you want to buy insurance, you have to give number of documents, you have to give number of background checks, you have to give a lot of details. But what these insurtechs are doing, they are all simplifying the processes so that they can have a better customer experience, uh, better underwriting, better claim management, fraud detection. And so overall, the idea is if all the processes come into one place, this space will increase and the reach will also increase. So if we see in terms of insurtech, there are a lot of insurtech companies in different space. For example, if we see in selling insurance, they are like Policy Bazaar Echo. Basically, these platforms simplify insurance comparison, purchase, and claims management. Additionally, the companies like Artivic AI focuses on backend solutions such as an AI-based underwriting and fraud detection. So this technological shift creates a demand for professionals who can ensure compliance with digital regulations, integrate IT systems, and audit these processes effectively. So as this industry embraces innovation, roles in digital advisory and analytics will continue to grow. So if we can see the points in bold, so all these companies are offering the software in a modular form. For example, they are offering APIs for different processes. So very recently, I came across a company, a insurtech company. So they were in claim automation, just like Artivic AI. So what they are doing, suppose insurance company receives an email from a customer. So what this software or API will do, once a customer sends an email to in the insurance company, so this company, this software or API that will convert that email into a claim form. So that will start a chain of conversation between the customer and company, and that then customer does not require to file the claim formally. So it starts a process. Then maybe a customer needs to give all the information, but it captures that email and then it helps to take the claim forward. So in a way, it helps the consumer journey and the experience of the consumer. Again, the company like Acute Risk, they are offering risk price optimization. Again, this refers to giving the insurance at a reasonable price, or you can say we have a lot of parametric insurance products becoming very popular in India. For example, if you see while you purchase something at Amazon, you get an option to buy insurance immediately along with the product. Or when you ride Ola, you have an option of buying insurance policy. So why this space is growing? So this space, actually, if you see the amount of premium, suppose you ride an Ola, maybe the premium would be for one ride would be 2 or 3 rupees, something like that. So since the premium is very less, so people don't mind to buy insurance. So similarly, for if you buy, suppose, an electronic product, and if you buy an additional warranty or insurance policy on that, again, if you buy a product of 10,000, maybe the policy cost would be around, say, something around maybe 200 to 500. So what this is doing, this is reducing the premium, increasing the base, so that more and more people can come into the net of insurance. Again, to simplify, I think the biggest pain point today in the insurance industry is health claims or claims, overall claims. So particularly for health claims, IIT have launched this National Health Claim Exchange. So this is a digital ecosystem which streamlines the health insurance process. And the basic purpose of this health claim exchange is to provide a common platform where all stakeholders can come together and make this whole system very easy to operate. So it integrates hospitals, insurers, policyholders, and TPS too at a single platform where everyone can see and track what is happening in the industry, in the claim journey. So the basic job is to bring informity across all stakeholders for claims management. In current scenario, you must have heard that if you file a health insurance claim, lot of claims are rejected, or they don't want to ask for all documents at one time, or they harass customers. So now in this process, everything would be streamlined, and all documents which is uploaded can be seen by everyone. So insurance company cannot just reject your claim, or cannot just reject for want of documents. So everything will be transparent. And health insurance is one of the biggest growing sector in the insurance space in India. So I think this initiative will help to remove the hassle and also increase the reputation of the insurance industry, where due to this late claim settlement, there are a lot of complaints and from the customers. Next, making industry insurance future ready. So first, IFRS. So IFRS set to be implemented by 26-27, which will provide a consistent framework for insurance contract accounting. So the idea behind IFRS is to enhance transparency and comparability of financial statements aligning with the global standards. So earlier it was supposed to be launched 2 years back, but IID has been enhancing the launch date. And chartered accountants will play a key role facilitating the transition from the current to IFRS. Next, risk-based capital. Again, This is a new concept being launched in India, and gradually risk-based capital will replace the existing capital requirement. So this framework focuses on optimizing capital requirements by aligning them with insurers' risk exposure. So as they grow, as the insurers grow their business, they need to put more capital. So this will be good also because suppose there is an insurer which has a 500 crore business and there is an insurer which has a 5,000 crore business. So the insurer with the amount of business will need to uh, add the capital. So this risk-based capital ensures solvency while promoting efficiency in capital allocation. And IRDA is very strict in terms of solvency margins. So this will help to the insurers to understand the requirement and capital, and they can arrange it accordingly and input and increase their capital accordingly. Risk-based supervision framework again allows to monitor insurers' risk profile dynamically, focusing on governance, market conduct, and operational risk. So together with this frameworks, it promotes a robust, you can say, resilient and a transparent ecosystem in India. And all these developments will help to create significant opportunity for professionals in different fields. Because once the business expands or this financial things expands, so we can get job in financial advisory, compliance, risk management. So now the IRD is slowly shifting from a rule-based to principle-based regulation framework uh, to emphasize innovation and operational flexibility. So basically, this approach allows insurers to design tailor-made products while maintaining compliance with the core principles. So for a professional, this means again opportunities in regulatory advisory, assisting companies in aligning their practices with global standards. So IRDA has revamped its regulatory framework to foster tech-led innovation and create a more efficient and dynamic insurance ecosystem. For example, use and file procedure. So earlier you had to, all insurance company had to file the product before that could be made live. But that was very time consuming because IRDA took time to pass the product, and the insurance company used to lose this early mover advantage. So this was launched. This use and file procedure was launched to make this process simple. Sorry. So again, ease of doing business. Then policyholders' interest needs to be protected, and tech-led innovation. So in this insurance, IRDA has launched some sandbox guidelines where insurance companies, before launching a full-fledged product, they can launch the product in a sandbox environment where they can test the product in a particular period, and if that product works, then they can finally launch the product formally. So in sandbox, they launch a product to a limited area or limited scope, and when that works, it can expand. And in terms of operational flexibility, also earlier there was a cap on total management expenses and commission. So again, IIT is also amending that guidelines. So there also they have rationalized a lot of expenses guidelines, and they have given a basic framework that you have to expend the particular amount, and in between that percentage you can change the head expenses in a particular head that they will be responsible. So in this slide, you can see the contribution of agent and intermediaries in the life insurance new business. So there's an interesting figure. If you see row number 2, the corporate agents channel, their market share has increased to 52%, and insurance agents market has reduced to 22%. So few years back, this insurance agency channel used to be the biggest channel for selling of life insurance policies. But gradually, I think in last few years, this banks has taken over. So with the launch of this bank assurance and other corporate agency channels, so now the percentage of business is increasing very fast. And if you see corporate agents, others, brokers, and brokers account only 4.85% of life insurance new business. The percentage of life insurance business procured by brokers particularly is very less. They are more into non-life insurance. And web aggregators, it is very few. Online, still, if you see number 10, online. So in spite of having so many of insurtech companies and policy bazaar and everything, the digital sale is still very, very low. So it is just 9.6%. And this figure needs to improve, because unless we have a significant figure here and we reduce the cost of distribution, reduce the cost of insurance, will not be able to increase the penetration, because it will not be possible to reach out to the masses in a big number. So, and recently this corporate agents ID issued some guidelines or advisory to banks also, that in terms of getting insurance business, they are focusing a lot on insurance rather than on banking business. So this is maybe they are receiving a lot of complaints of mis-selling also. So they have advised bank not to focus on insurance, but see that they are not compromising the quality of insurance sales and experience. Again, in this slide, if you see the contribution of insurance agent and intermediaries in general insurance space. So here, if you see the contribution of brokers are very good, is very good. It is 32%. The agency channel is around 32%, and direct business procured by insurance companies is around 30%. Again, here direct business through internet is only 0.55%. So in this, general insurance has a problem because you cannot sell a complex product online. So for a big company, you have to take it offline only, because there are a lot of terms, conditions. So the direct business is mostly focused on retail lines of products like motor, health, or online products which can be brought easily, or simplified products where there is no much hassle and they can be bundled together and can be sold easily. Now I think we need to discuss something about risk, because risk management is of utmost importance in the current scenario. Post COVID, the way the risk space has evolved dynamically. So we need to have we need to closely monitor the risk space, how the things are unfolding in different risk areas. So climate again is a very, very important risk, which is become very critical for the insurance sector too. So from extreme weather conditions like flood, droughts, to regulatory shift towards sustainability, these risks create significant challenges. But along with the challenges, it will also create opportunities. So as a professionals, we can assess the financial exposure of insurers to climate risk. So see, all these things that is coming was not there previously. Earlier, as a professional, we had very few options. We'll talk about the detailed options later on. But I think we need to evolve. We need to explore what are the opportunities, what are the gaps, what are the target areas, what are the areas where insurance companies or the stakeholders will face problem. So this will help us to create opportunities. So for this, we need to watch the whole scenario very closely and think about what best solution we can give to them. So we can help evaluate their underwriting and claim strategies for high risk areas and high flood prone regions. Then insurers are increasingly adopting ESG frameworks. So we can assist them in ECG reporting and disclosures, ensuring compliance and regulatory standards. Again, in terms of insurers investing in carbon credits and offset projects, accurate financial reporting is essential. So as a CA, we can provide transparency, ensuring compliance and evolving accounting standards. So in a lot of areas where we need to explore and we need to offer, create things which are not there. For example, this maybe everyone is not offering these services. So we need to create a bundle of things that, okay, we can offer you this product in this new environment. So by leveraging our expertise, we can help insurer navigate these challenges and fastly siege opportunity in sustainability, and we can be able to contribute in the resilient and environmentally conscious insurance ecosystem. Again, the risk of reputation and governance is of quite prominence. So a single event, I think, can disrupt the whole performance of the company. So this all companies need to keep in mind, and how they are faring in the public space. So this is one of the most, you can say, critical challenges being faced by the insurance sector today. This risk can, I think, severely impact the insurer's credibility and operational sustainability if not managed effectively. In terms of reputation risk, I think the biggest problem is mis-selling of policies, fraudulent issue of policy or fraudulent services, poor service delivery. It can lead to reputational damage, and it also erodes customer trust and market share because oh, insurance, I think, works a lot on word of mouth thing. So if the thing spreads that this company is mis-selling policies, so what is happening in bank assurance, as we talked before? So in bank assurance, there is a lot of mis-selling of policies. So what is happening? It is degrading the credit of banks. So for that, RBI has also taken it seriously that the basic aim of banks is to sell banking products, not insurance. So it should not happen that their reputation is affected due to selling of insurance. Again, weak governance structures can affect transparency, compliance, accountability, leading to regulatory penalties and loss of stakeholder confidence. So what are the opportunities we have? So as an insurer, as a CAs, we can evaluate insurer governance framework, including reviewing board processes, risk management policies, internal controls. And I think post-COVID, there has been a lot of traction in the risk management space. So in fact, now it has been mandated by IADA to have a full-fledged risk management department. So I think as a CA, we have a very good opportunity to understand this risk space and help them to create the whole risk framework, how the whole organization will work. And this needs to be implemented at the head office level, and then whole company, whole unit would be covered. So I think this can give a very good opportunity to the professionals. Again, in reputation risk management, we can assist in developing strategies to mitigate reputational risk by advising on customer grievance redressal mechanisms, creating transparent operating systems, or maybe we can help them to build customer trust after a crisis. Again, a very important and significant risk which we face today is of cyber risk and data protection. So we have been doing very good in terms of technology upgradation and technology enhancement. But again, with that, we have the risk of cyber attacks. Recently, the Star Health, you must have heard, they were they had a cyber attack where their data was compromised and it was sold to, I think, lakhs of data were available in the public domain. So they had to face a lot of reputation risk due to this. So I think all insurance companies, all stakeholders, brokers. So this has become cyber has become critical priority in the insurance sector as the digital transformation will accelerate. So with the rise of cyber attacks and breaches, insurers also face challenges which demand innovative solutions and robust risk management technologies. So I think as chartered accountants, we can offer cyber insurance advisory. They can assist insurers in designing and marketing cyber insurance products. So still in India, cyber insurance products is very costly. So if you want to take any cyber insurance product, it is offered on a standalone basis and the prices are still very high. So unless it comes down, I think there will not be much taker. Currently, only very big players are taking cyber risk policies. So we need to have some good priced policies so that demand can increase. Again, a key area is to evaluate and certify insurers' cybersecurity framework, and not only insurers, including intermediaries also. So in IRDA regulation, I will talk about ISMP audit later on. So they must have, IRDA has some guidelines that they must ensure compliance with regulatory standards like issued by IRDA and other bodies. And maybe our expertise can help insurer to have a data and robust policies in cyber managing cyber risks. Again, cyber threats can often lead to fraudulent activities, especially in digital claim processing. So, as a forensic accountant, we can investigate suspicious transactions, uncover irregularities, and recommend measures to mitigate future risks. So again, a big risk is emerging technology, risks from emerging technologies and insurtech. So as emerging technology and insurtech are revolutionizing the insurance industry, it is also driving efficiency and transforming how insurer operates. So from blockchain to artificial intelligence and IoT, I think these innovations are not only enhancing customer experiences, but also redefining the whole ecosystem of insurance, ecosystem of risk management, underwriting, and the claim processing. So in this process, this space also, we can offer a lot of services as we can evaluate financial impact and return of investment by adapting new technologies. For example, uh, we can assess how blockchain can streamline claim processing and how AI can help in improving underwriting accuracy, which will help insurers to justify this investment. But for doing all this, we need to have some good experience in this space, and for this we need to study, attend webinars, get access to different platforms where we can get more information about the risk space and the evolving technologies. Again, under the digital transformation advisory, we can give guidance on cost-effective digitization strategies. Then we can provide advisory services to ensure seamless integration of technology while maintaining compliance with regulatory requirements. Again, compliance is a buzzword because if you see the IRDA regulation, I think the biggest pain point is compliance. So as a professional, I think compliance can be a very useful opportunity tool for us. So in terms of big data, CS can help insurers to leverage big data to optimize pricing models, identify market trends, and minimize risk. So the professionals, I think, can bridge the gap between this finance and technology, because if you just implement the technology, it will not work. You have to see the aspect of finance also. So, and I think this chartered accountants, they bring a unique combination of analytical skills and business acumen, which can play a pivotal role in this transformation. The geopolitical and economic risks, uh, it has again becoming increasingly influencing the insurance industry, as global uncertainties such as trade wars, inflation, uh, political instability directly impacts risk assessment strategies. So, in terms of uh, geopolitical risk, for example, this Ukraine war or any events happening around the world, what it does. So, any thing happening around the world affects the insurance premium. And in the first line, if anything happens, the world, any loss happens or any war happens, the reinsurance premium increases. And if reinsurance premium increases, they advise not usual insurers to again increase their premium because their reinsurance account has increased. So the global events impact individual countries also. So if the things are not working well globally, it will impact us. And in terms of economic crisis, also the things are the scenario is same, that any uh, things happening around the world impacts us. So in terms of global reinsurance accounting, cross-border advisory, we can do a lot of things. Economic risk forecasting, we can do a lot of. There are a lot of areas where we can leverage our expertise. I think when we are looking for the opportunities in the insurance sector, this is the most important point. And most important point, and you can say the pain point too, because currently the all the stakeholders, they are not they are very pissed off with compliance, because IRDA, they are slowly moving to principle based regulation, but still their compliance is very high. So if you see compliance of, for example, insurance brokers. So from getting a license get an insurance broking license, I think it takes on an average maybe uh, from 1 year to maybe 2 years, 2.5 years. That depends. The compliance is so I will not say difficult, but it is time consuming. And maybe IRDA currently is not that technically sound. Their software is not that technically sound, so that the things move easily. So this is the biggest pain point currently in the industry, and we can get a lot of traction from this segment. So and this guidelines of IRDA is constantly evolving. So what is happening if one guideline comes and they again revise it? So then the insurer or the intermediaries, they need to keep track for it. So in terms of advisory, we can play a pivotal role in helping insurers and stakeholders in guiding them in solvency margin, then expenses of management, and compliance requirement for brokers, corporate agents, and similarly, like insurance broker, corporate again agents also need to get licensing. So they again have a lot of issues with license, and normally it takes maybe a year or so to get a license. And the IT system of IIT is very complex. So as a professional or the chartered accountant, we can pitch in here and we can offer these companies who want to come into this business. So they can offer their services to help them to get license or to file their regular compliance or to their regular returns and all. And across all stakeholders, we can say insurtech, or because in insurtech or web aggregators, again, they are technology based platforms. So they have a lot of compliance related to risk, related to technology. So there they need to adhere to cyber security practices, then how the system will work, so that they do not have any data breaches and all. So these also need to, we can advise the clients. And this offers significant, I think, a significant opportunity for us as an advisory role and auditing role too. So I think we have already talked about the reputational risks. So basically, operational risk stems from the day-to-day operation of the business. So it in operational risk, I think we can help the companies to streamline the operations or streamline the processes where they are facing a problem. Help stakeholders like intermediate distribution channel to streamline their operational processes. And in lot of yeah, segments, they outsource their activities too. So there also we need to, we can offer operational risk audit, and we can offer services like claim management, policy servicing, or maybe you can say sort of advisory services in their existing work, so that we can take some of their pain points, and it will create some opportunities for us too. And again, over outsourcing is a very important area and critical area of operation. And IRDA has a guideline for this or notification for this outsourcing services too. So this can be a good area where we can leverage our expertise in terms of auditing the current process, then advising the new process, what can be done, and help them to meet the compliance and the standards. Again, we have a very important aspect, fraud risk management. So fraud is a critical focus area for insurance industry, and again, big pain point for the industry. So these activities not only lead to financial losses, but also undermine customer trust, because the customers who are defrauded, maybe they lose trust, and by word of mouth, they spread that insurance is not good and it should not be bought. So it creates a negative publicity for the industry. So if we talk about fraudulent claims, I think it's the biggest challenges, particularly in the segments like health insurance and motor insurance. And maybe in health insurance, it can include fake hospitalization, staged accidents, inflated bills, and then inflated bills from hospitals, or or from other related segments. So overall, this fraudulent claim is affecting the industry very badly. So this needs to be checked. And in terms of emerging risk, as we said, the new risks like cyber fraud and identity theft are emerging. So we need to keep a tab on that. And fraudsters are exploiting vulnerability in digital claims processing. And since AI and blockchain it is coming, I think this will reduce. But still, we need to delve deep into it. How we can help? We can get knowledge into this segment, and then only we can help the insurance companies or the stakeholders. So what can be done here? We can maybe do forensic accounting. CA with expertise in forensic accounting can identify, investigate, and prevent fraud by analyzing claims data, identifying suspicious patterns, and recommending corrective measures. So now we all hear about ChatGPT. So knowing ChatGPT is not enough. So what you need to do, we need to, by study or by research or by regular study of different platforms, we need to identify which are the core areas from where we can prevent this fraud. So once we get adept in this, then only we can advise the insurance companies or the stakeholders. Again, ERM can be a comprehensive, as I talked earlier also, we can help to build a comprehensive framework to identify, assess and mitigate risk. So there are two aspects to it. One is building framework for the company, and this can be done maybe to if we get an outsourcing opportunity, we can develop a full system for them and advise them on time-to-time basis. So risk advisory again will help insurers to managing emerging risks. So and help them to strengthen internal controls, maintaining fraud detection technologies, and aligning with regulatory standards. So I think as a chartered accountant, we can play a pivotal role in fraud detection, implementing frameworks, and safeguarding the integrity of the industry. Now let us see some figures related to insurance fraud. So in an insurance company to register in India, I think roughly they need a capital of 100 crores to start an insurance company. And if you see the amount of loss, the estimated loss in the insurance industry is around 30,401 crore each year due to fraudulent activity, equating to around 8.5% of the industry revenue. So this is huge. You can just imagine the number of insurance companies that can be that can grow or that can come in the framework if this fraud is stopped. So this fraudulent activities not only drain the industry resources, but also erode trust between insurers and customers, which affects the industry growth and reputation. So in terms of, if you see some specific sectors, the claims, fraudulent claims relate to health conditions in the while taking a policy. Then in health insurance, it can be a lot of things such as fake hospitalization. Just few days back, there was a news that about fake hospitalization and fake accidents, inflated medical bills. So, but again, this who is being affected by this fraud? Ultimately, as a common man, we are affected because the lost portfolio. For example, I think a year or 3 years ago, the loss ratio in health insurance was around maybe 200 to 300, around 200%. So if insurance company was taking 100 rupees premium, they were giving back 200 rupees. So, but I think in last 1 or 2 years, they have rationalized this loss, and currently it would something be around maybe 80 to 90% in different companies. So that depends on the framework that the company has. Again, motor insurance, same like health insurance, staged accidents, counterfeit policies are widespread issues. So in 2023, the Deloitte survey revealed that 60% of the private insurers in India have observed a significant rise in insurance-related frauds, particularly in life and health insurance segments. So this 60% is overall, not in a particular segment. So what needs to be done? So all the insurance companies and stakeholders, they must have a robust fraud prevention measures. And as a chartered accountant, we can play a key role in implementing fraud detection systems, conducting forensic audits, strengthen internal controls. And a lot of time, what happens now? Suppose they may not be requiring a product. So we need to design a product as a chartered accountant or professional. We need to design a product that, okay, you have this problem, you have this challenge, and we have a solution for this. So if you reach out with a solution then I think it will help us to make inroad into new avenues. Otherwise, what happens? We are doing some sort of traditional audits. We don't explore new areas, and these are thousands of crores industries. So if we can, and since a lot of chartered accountants are auditors too, so they can advise them, they can connect with them in what way we can expand the role of our services, the insurance companies. So this slide again speaks about the terms of percentage. Health insurance accounts for 40% fraud, motor 20%, life 10 to 20, 15%. Crop insurance fraud is also there, but again, they are taking a lot of initiative in this by digitizing the whole process, because now before reporting, you get all the information through satellite that about a particular area where any loss has happened due to rain or flooding. So data is available. And the key point, I think, would be data, because currently in last few years the data bank has improved, but before that the data of the whole insurance industry was not very good. So what happened? Due to laxity of data, they could not get the actual figure what is happening in this space. So data is again, we have a bureau called Indian Institute Insurance Information Bureau. So their job is to collate all data from the insurance industry, so they get a regular return on different segments of the industry, and they help in increasing the broad sizing the database and with different segments. So now here, if we see the different roles that we can join as an actuary, we can join as an insurance broker, we can take a license of insurance surveyor, we can join as an insurance arbitrator. So insurance arbitrator is again a good area. I'm also acting as an insurance arbitrator. So I had been doing a number of sole arbitration cases and joint arbitration cases too. So you must be knowing about the arbitration process. So in this, you have one person is appointed. All insurance policies have a clause on insurance arbitration. So before going to court, you can exercise the clause of insurance arbitration. So once you exercise this, the insurance company and the policy or the client, both in consultation, can appoint insurance arbitrator, or they can appoint the arbitrator individually, and then this process will go on according to the Arbitration Act 1996 and as amended in 2015 and 2024. So we can approach both insurance company and customer for arbitration. So it's a good area and a good professional fees too. So in terms of inspection, loss investigation, certification, as an investigator, we can do a lot of things. Consultancy, we had talked earlier also. As a risk manager, a lot of scope is there. So traditionally, when the word insurance comes into our mind, so we basically think that insurance is just a selling point. In terms of education also, we have a lot of institutes in India which is offering MBA courses. So when we interact with the students, so the picture they have in mind that insurance is only about selling insurance, like insurance agent and all. But the insurance industry is offering so much of back-end operation or back-end roles which people can join. So it is not known well. So we can just see the number of areas where we can join as a different, maybe analysts, as underwriters, data scientists, AI specialists, cyber security experts. So as a job also, as a advisory services also. So all these roles are ESG, I think, can be a very good area. Rural marketing specialists. Then policyholder grievance is again a very gray area in insurance industry. A lot of people are, I think, fail to mention there are few startups in customer settlement, this claim settlement also. There are many companies offering claim settlement services where they take a percentage of fees from the customers, and rest they coordinate on behalf of customers. So like this forensic auditor, data analyst, there are a lot of job roles which we can join as a job, or maybe as a advisory capacity. So again, in terms of auditing services, we can have statutory audits, internal audit, forensic audit, risk management audit, cyber security, IT system audit. In IT system, we can study about the current system of the insurance company or the stakeholder. Cybersecurity again is an important area. IRD mandates having cybersecurity audit. Risk management audit again is a good area which we can explore. For example, in risk management, when any corporate goes for insurance, they must all the value that is insured, they must have a particular value which needs to be insured. So here, what we can do, we can approach the corporates that we can do a sort of audit about their existing infrastructure, what assets they are having, and how their assets are covered, and just a whole snapshot of their the asset of their industry, the machineries they have, the assets they have. So how well they are covered with insurance, because if suppose an accident occurs or any fire takes place, the company will get claim. But what happens? So suppose a claim, fire occurs today, so that operation will not be restored immediately. It will take time to restore that. So during that period, maybe it can extend to from a few days to few months. So company would be at a loss. So we need to have a framework where we can we can do the risk management audit so that we can analyze what is the actual position of the company, what asset they have insured, what is under insured, what is not properly insured. Then we can advise them, okay, you can uh, cover this set of assets which is not properly covered. And I think in India, one of the biggest problem is under insurance. Under insurance means the property is not valued at its actual cost. So that advisory we can give. Then again, ISMP audit is an important. I think we'll talk later. We have a separate slide for this. So what is ISMP audit? So ISMP audit is a critical component of insurance sector, which helps to ensure integrity, confidentiality, availability of sensitive data. So this audit focuses on assessing how insurers manage their information in alignment with regulatory and industry standards. So IRD has a lot of regulation related to cyber and cyber security and data. So every insurance company and the intermediaries, mostly insurance brokers, they need to mandatorily have this audit. So you can grow your expertise in this particular space where you can do the audit. So basically the objectives of the audit are data protection, compliance with IRDA regulation, then risk management. You need to find out which are the loopholes in the system and how to plug the gap. For example, suppose you have a LAN system. If what are the chances that people can transmit data through that, or maybe what are the chances that some data can be shared by the employees, and what are the data security measures taken there? What are the virus softwares installed there? So all these will come under the audit preview. Then business continuity again is a very big area, because post-COVID, what happened? A lot of companies faced a lot of stress in terms of continuing their operation. So what business continuity audit, this can help you to analyze your current, how you are prepared if something happens such like a pandemic. So where are your data server space kept? how it is being maintained. So always the place where you are having your head office, the data center should be at a separate third place and maybe at multiple places. So what business continuity plans do you have? And apart from this ISMP audit, you can also, this business continuity and disaster recovery can again be a part of advisory services, because you can offer them your expertise, how you can prepare a plan and program of each business unit. Something happens, what steps would be taken, who will be taking that steps, in what time the systems would be restored, and what are the chances of data loss, because in insurance industry you are handling the data of customers, so the impact can be huge. And suppose if it is shut maybe for even for a few hours or few days, it can significantly impact the whole operation of the company. Then fraud prevention and detection again is a part of the SMP audit. You need to report on that. What are the fraud prevention detection measures being taken by the company? So overall, the scope of ISMP audit is to evaluate the IT infrastructure, evaluate servers, networks, databases, cloud systems for vulnerabilities, policyholder data management. So it helps to review process of collecting and storing data, policyholder information, and now a lot of companies, they are slowly having this GDPR regulations where data policies are very, very stringent. So if they have any loss, and when they are going, they will be selling policies outside also, then it can be quite difficult. And access control, what systems, what are the sensitive systems, is role based, and whether it is regularly monitored. Incident response mechanisms. So here you need to identify what are how the insurers handle the data breaches or cyber incidents. So basically, they should have a manual that if something happens, what would be done, who would be doing, who are the responsible persons. So again, this if you have a good risk management frameworks, so all this comes under that, because they or evaluate about the different possibilities of risk. If this risk happens, what needs to be done? So if we connect this with risk management framework, if we can help them to build a risk management framework. So because currently still most of the companies don't have that robust risk management framework. They are still under the process. So earlier what used to happen, uh, this role was being done by maybe say CFO, or some other people was having the additional role of a risk manager or CRO. So now slowly companies are also understanding that no, they need to have a standalone CRO for the company to understand, evaluate the potential risk, and to prepare a whole framework. So I think as a CA we can have good opportunity in this. Third party risk. So again, third party security measures of vendors. For examples, you have couriers attached to companies who are delivering policies and all. So there it can be tampered. So what measures they have kept. So overall, I think scope of audit is good. So we can do a lot of work there. So again, this is a traditional opportunity for insurance surveyor. For chartered accountants, you can become an insurance surveyor. So earlier the limit was, I think, motor insurance it is 50,000, and other than motor it is 1 lakh. I think this is being revised or is going to be revised. So slowly, the insurance companies, particularly private insurance companies, they are having private insurers too. So IRDA, you have to take license from insurance IRDA. So you can take license as individual or for insurance firms or companies. So there are different areas where you need to take license. So they have made a few categories: fellowship, associateship, and so now recently, very recently, there was earlier what happened for allotting a survey job, you had to approach an insurance company, and there are a lot of anomalies in allotment of insurance surveys, because maybe at times they were not allotted to the people who were experienced in it. Maybe people would have got the survey on based of their connection. So now IRD has come out with a new guideline where they are creating an online portal with ISLA, the body for insurance surveyor, and GIC Council. So they are creating a platform where the survey job would be allotted automatically. So the insurance companies now cannot allot it directly. So whenever a loss will happen, they will have a panel of surveyors, and from there they will be allotted the job. So they are in the process of building this website, and I think very soon it will be operational, maybe this year, end of this year, or middle of the year. So for enrolling as a surveyor, you have to register on the BAP portal. BAP portal is the portal of IRDA for all compliances. So first you have to take training under existing surveyor. So that depends on the category you choose. So once you complete the training, then you have to get a trainer's acceptance certificate. Then you fill up the enrollment form. And when you get training completion certificate, you can apply for the license. And for this, you have to be member of ISLA, the Institute of Surveyors and Loss Adjusters. Again, in terms of broker, as I said earlier, the number of brokers in India is very few. We have only 683 brokers in India. And out of that too, I think maybe a few hundred or so may not be that much operational. And they are mostly focusing on general insurance business. So you can start an insurance brokerage firm, you can start advisory services firm. So direct broker fees is around 75 lakhs. Then reinsurance broking fees is 4 crores. Composite is around 4 crores. So so for getting a license, you need to have a broker's principal officers, appoint a principal officer who need to take an exam, qualify the insurance broking exam. Then you need to keep a deposit in bank for getting the license. Then once you get the license, you have to take this professional indemnity insurance. And then you have to comply with the IRDA guidelines. So again, advisory services for starting an insurance firm is a good option because there are a lot of hassles in applying for a broking license. It takes 1 year to 2 years, lot of forms, and the portal of IRDA is very, very, you can say, it is very difficult to handle that portal, and maybe to file a form, it takes days to understand in what way it will be filed. So it's the biggest pain point of the industry even to do a small thing in IRDA. If they change a Java, they update Java or they change something, it becomes very difficult to understand what has happened. And the support from IRDA is very, very poor. So as a professional, we can have some opportunity in this since complication is there. This again, corporate agent, if you don't want to be an insurance broker due to hassles, you can opt for a corporate insurance agent. So any standalone company or any company can apply for this license. So mostly the IRDA prefers a separate company for this. They need to get the name of the company passed and approved from IRDA before applying for license. And once they do, you can apply for the license. Again, here you must have the principal officer who must pass the training and must have specified person passing the exam. Earlier, the corporate agents could do business for around 3 life, non-life, and health insurers. So now, as a measure for increasing financial inclusion, they have increased this number to 9. So now they can sell policies of 9 insurance companies. So they have a registration fees. So I think we have discussed insurance TPA is a separate intermediary, the third party administrators who look for the insurance, health insurance claims. Again, I have listed some areas where claim management startup can be done: compliance, investment, underwriting, actuarial consultancy, reinsurance. A lot of areas where we can offer our services. Bank assurance. So again, as I talked before, if you see, there are a lot of problems plaguing bank assurance. So some of them could be reputation risk, low product knowledge. The biggest challenge in bank insurance is the bankers don't have knowledge about insurance product. As you must be doing audit of insurance of banks, audit of branch audits and all. So you must be showing that they are the insurance branch offices or the operating offices. They are not much concerned with insurance. So in practical, what happens? They just want the insurance. They don't know. They don't care about the actual value of insurance. For example, suppose anybody takes a loan of 1 lakh rupees. The property that they have given is of say 5 lakh rupees. So now what banks do, they just have that insurance of 1 lakh up to the amount of the loan given. But it is very, very bad because once a claim comes, there would be huge under insurance. So since the property is of 5 lakhs, they will get only proportionate percentage of the claim back. So in most of the cases, we have seen in number of audits, the same problem that the bank managers or bank officials don't focus on these areas. They just want to comply with the loan terms. Somehow they want to have some piece of document which has come from insurance company, and in number of cases, in a few of our audit last, I think I saw the this document was not kept in bank also. So bankers lack expertise in selling complex insurance product, and the mis-selling in bank is the highest. Since the percentage of, if you have seen in earlier slides that the share of percentage in bank insurance was around 52%. So the mis-selling is also highest in bank insurance. So since the bankers don't know this, just somehow, if you want to get a loan, you have to take a policy, you have to apply for anything, any transaction you do with the bank, you need to take an insurance for the loan product. So in terms of overdraft, and also they don't consider the actual value. They just consider anyhow they want to have a piece of insurance, or I don't say that everyone does that, but in most cases I have seen that this problem is there. And reputation risk, as we talked before, that this again leads to reputation risk. And this RBI also cautioned banks because they are getting affected due to this in selling of insurance. And till now, bank is having a different image in our mind that, okay, if you go to bank, they are safe, secure. But when they feel cheated by banks, so again, there is huge trust deficit. So this needs to be plugged. So while doing bank audit, you need to check the documents is in branch, there is no under insurance, the adequate coverage is there, policy is renewed timely. So I think we are done with the basic presentation part. So as you must be knowing, we have a diploma in insurance and risk management. So this is a post-graduation course which can be done by all the members. So I think if you want to get inroads in the insurance and risk management industry, you should do this course because this course will help you to understand the nitty-gritties of insurance. Because unless you have a deep knowledge of insurance risk management, all the services that I talked about, that will not be feasible to offer. So important is you need to have some sort of a course, or you can say online. You can also take few online courses for risk management and all. But I think to enter in this advisory space or this consulting space, you need to have this DRM course. I think it is also under revision also. So maybe, and you will get all the details on the website. So now, while summarizing today's presentation, I think in terms of penetration, there is huge under penetration of insurance in India. Despite the significant growth, insurance penetration remains below the global average. As I told, it was around 3% and the 3.5%, and global is around 7%. So which signals immense untapped potential. So we need to increase the penetration, reach out to the rural areas, reach out to the tier 3, 4, 5 cities. So Indian insurance market is expanding at a fast pace, driven by digital transformation, economic growth, and regulatory initiatives. We talked about a lot of threats: climate change, environmental, geopolitical. So all these risks and the needs of customers are evolving. So we need to study the emerging risks and then tailor our services in what best way we can offer them. So growing stakeholders like new intermediaries, insurtech firms are growing at a very, very fast pace. So I think in next few years there would be a huge number of insurtech firms who would be using needing this um, cyber audits and different services relating to insurance. And suppose there are two people, one chartered accountant who don't have a domain knowledge of insurance and one has domain knowledge of insurance. I think in future when the thing becomes more complex, the more background you have about insurance, it will help you. So again, the job opportunity for job is evolving continuously. So the job roles I showed, there are diverse open job roles in compliance, auditing, advisory, technology, integration, and particularly in risk management space, because risk management is now companies cannot survive without risk management. And the way we have this dynamic environment and the way the risk management is evolving, I think we have a lot of opportunities in this particular space, and we should think about it and offer our services in this segments. So I think this was all from my today. So
Yeah. Uh, hello.
yeah,
Yeah. Thank you, sir. Thank you. It was indeed a great presentation from your side with all the risks and other factors. So we have a few question and answers session that we have to take. So I'll be reading out the questions. Maybe you can take over the session. Yeah.
sure.
Yeah. The first one is how to enter for internal audit in insurance industry.
For internal audit, you have to apply to respective insurance companies only.
Yeah.
You have to reply to their audit or investment teams, or there you can apply for audit.
Okay.
And for intermediaries, you can the intermediaries which are big, for example, Policy Bazaar or the thing that they are coming. So there also you can approach anyone, not an issue. Or the person who would be relevant handling this department.
Okay. How and in what way chartered accountants will be able to play a futuristic pivotal role in reshaping the concept of risk mapping and mitigation through and in insurance industry?
I think I discussed in a number of slides that risk management space is evolving. So as this risk management space grows, more and more opportunities will arise. So for that, we need to be equipped also with relevant risk experience, because risk again is a separate technical space. This is different from our the segment that we are into, the accounting segment that we are having. So for companies, we need to have risk management frameworks. The risk mapping and everything will come under it only. So once we study that, we can offer our services in risk space, and we can offer to insurance companies, intermediaries, the startups that are coming, insurtechs that are coming. So the overall risk space is evolving, and we need to have a good measure of experience in it. Otherwise, it will be difficult to cater, because still in India we don't have any course as such. So we have a body, Risk Management Association of India. So we do lot of webinars every month. I think one or two webinars we do. So if anybody interested to learn, they can obviously visit our website, rmaindia.org. So we do a lot of webinars on operational side, on operational risk and ERM and other aspects of risk. So I think it will help to understand the things better.
Yeah. Right, sir. Next one is insurance agency. Is it allowed for members in practice?
No, If you are in practice, it is not allowed. So you can do it individually. So side by side, it is not allowed. Similarly, for insurance broking also, if you are an insurance broker, you cannot do the practice.
Practice.
So you have to,
Yeah.
you have to surrender the license, then only you can do the
Okay, so it is either the practice or the
either,
insurance.
either.
Right, sir. So how do we overcome the inbuilt disadvantages in the embedded insurance concept, as it is likely to be more expensive for the customer as well as for the insurance provider, as they may have to face additional manpower cost at the customer or the end user point.
No, I don't think there would be much additional cost in embedded insurance, because I think all these insurance are sold online. So
Okay.
idea of offering parametric insurance, if you see, or this embedded insurance, since these are being developed by all online channels.
Mhm.
So the first idea is to reduce the cost, because if you sell this at a higher cost, nobody will purchase. So if you want to increase the reach, you need to reduce cost. So once you sell through these online channels and different partners, not only on online channels, online platforms. For example, if you sell through Amazon, if we have a tie-up with Uber, we have a tie-up with Ola. So the cost reduces, because you don't have to push customer for purchasing the insurance.
Right.
So the prime objective is to connect with retail customers, so who don't mind paying a small amount. Suppose if you ask me to buy a policy which is say 2000 rupees premium annually, so I will maybe think whether I need to pay or not. But when you approach for a insurance for say 5 rupees or 10 rupees or 20 rupees, so I don't care. You can just take that when you go by flight. You don't care about so much that okay, 50, 100 rupees we can already pay. We can buy this additional insurance for loss of baggage and all. So when you are going traveling outside, you can have travel insurance policies. So I think but indeed, embedded market is a very good space which will go very, very fast. And we have a huge size of market which is untapped. So I think the future growth of industry somewhat will, this particular segment will fuel that.
Great. The next one is how a practicing CA firm can get empaneled as an auditor in nationalized as well as private insurance companies.
Again, for nationalized, they I think appointed from CHE only. So they have to abide the guidelines there. And for private, I think you can directly apply. There is no guideline as such. So they can apply to individual companies. And as per norms of IRDA, they can be appointed. So there is no specific, you have to connect with individual companies. There is no specific role, maybe the investment department or the relevant department you need to connect.
Can you please elaborate on the opportunities for CAs as in loss assessment of miscellaneous?
Last assessment
Of miscellaneous.
miscellaneous.
Yeah.
Can you please repeat the question once again?
Yeah. Please elaborate on the opportunities for CAs as in loss assessment of miscellaneous.
There is nothing. Miscellaneous is a different term. Basically, when you enroll as a surveyor and loss assessor, you can enroll as a surveyor and loss assessor.
Okay.
So they do both. They do survey also, and they can do loss assessment also. For example, as I was talking about the pre-inspection audit, so similarly, we can appoint a surveyor also to understand the risk. For example, when a factory is going to have an insurance, we can ask a surveyor to submit a report on what can be the estimated the whole value of the insurance. What should be the actual value of the insurance? Because then you will be safe from under insurance and all. So there you can have pre-inspection surveys, and for loss assessment, then you can again you can privately have loss assessment audit or assessment in case to case basis.
Is a CA qualification sufficient to become insurance surveyor or in claim settler?
Not sufficient. You need to upgrade, because the problem would come maybe in a few cases it would be sufficient, maybe where accounting portion is there, but areas where insurance things come into play. For example, I'm also acting as an arbitrator. So there are a lot of technical and gray areas in insurance which will be problematic. Do you need to study that? So only by doing as a professional will not be able to guess that gray area what can happen. So it is always advisable to have do some course on insurance. Maybe DRM you can do, or there are a number of courses on insurance. There's one Insurance Institute of India which offers a lot of courses on this one on general insurance and life insurance on other aspects. Then there is Risk Management Association of India. They offer a online course on risk management. So that can help you to understand about insurance. But it's always advisable to you to have a prior knowledge of this space, because otherwise you'll not be able to go in deep to offer the services.
Would actuaries help us?
Yeah, actuaries, anybody can become actuaries. We have a body called Institute of Actuaries.
Right.
So we can enroll there. So now a lot of people are enrolling as an actuary. So many students are doing CA also and actuary also.
Right.
So actuary is a very good profession, and maybe I think 20 years back when this IRDA came and privatization was done in India, I think we had only 80 actuaries, 80.
Right.
So and in 80 also maybe the number of senior actuaries was around 50 or 60. So very young actuaries were very few. But I think in last 10, 15 years, this number has grown very, very fast. So I think there are around few thousand of maybe who have completed. And the best part is the actuaries is you can complete it on a paper wise. Say suppose they have 10, 15 papers, so you can
Correct.
complete part by part.
Correct.
And as you complete, you get any company can take you, can employ you, and then you can complete the balance course after working there also. And in this advisory services also, they are doing very, very good. And the fee structure also is very, very good in this one, actually.
Okay.
So if anybody we can do actually, nothing like that.
Right.
And along with CA, I think it can be a killing opportunity.
A great combination for that matter.
Great combination.
The next one is again embedded insurance. Do you think this will increase the cost of insurance? But we have already discussed.
Yeah,
it won't increase the cost. It is
No,
basically
in fact, it will help to decrease the cost.
How would that be, sir? If you could throw some light. Yeah.
No, this product are designed in a way that it's cost effective.
Cost effectiveness.
Not like traditional products.
Correct.
So in traditional product, if you buy a traditional product, there are a lot of complication. You have to give a lot of details and all. It is all sort of you can buy online, just sort of easy in a easy manner. You can buy any online product.
Correct. So while booking the tickets of railways or flights or anyway, so you just have to do a tick mark and then
you have to just a tick mark. They don't need information, because suppose you fill a normal policy form, what happens? They ask you a number of information, maybe 10, 20, 50 information.
Right.
And you need to fill that information properly and everything. But here you don't need to do anything. Just put a tick on it. Your number is there, mobile number is there. For example, if you take this loss of baggage insurance, or in agriculture, if you take say this parametric insurance which is coming. So what happens? Suppose in parametric insurance you have a policy where it is suggested that if rain damages your crop, you will be getting claim.
Correct.
So the technology is advancing so fast that what is happening? Suppose in a particular region rain happens, so you will need not have to file claims. The insurance company will verify the data with satellite with the relevant agencies, and they will directly transfer the amount in your bank account. Right. So you did not go to the thorough process of filing claim and all. Correct. So there is a company in US called Lemonade. So they do a lot of things, parametric insurance like this. So basically, embedded insurance is taking less of our time and lesser amount of money. So it is increasing the chances, fast settlement of claim, better underwriting. And but the only challenge in those insurances is that we don't have much experience. Experience is less, right? Because we don't have much use cases. What would be the actual amount? But again, the best part is it is being sold to a huge number of people. So their law of average comes. Right. The next one is: are banks responsible for mis-selling of life or general insurance products when claim is repudiated by the insurer as not covered by the policy scope, which was never properly informed to the insured or the buyer at the time of policy purchase? Yeah, now this depends who has mis-sold the policy.
Okay.
The mis-selling has been done by bank. So
Correct.
definitely they would be liable to, and this is the reason that if you see the figures, as I told earlier, also 52% is the percentage of share of bank assurance.
Correct.
So how are they selling this product? And they are not, the mis-selling is rampant and huge. So
True.
as I said in one of the slide, I think he was talking about the person liable. So definitely bank would be liable.
The person, yeah, the bank is liable. Yeah,
Bank is liable.
but then if you are going for a smaller activity like opening of a bank account or taking of a loan, banks are simply asking us to take the loans, to take the insurance. And people who are
And they
not
don't,
aware, they just say ki whatever is the cost, we are ready to pay.
and it is in many cases it happens. Suppose you are in need of a loan and you need the money urgently. So
Correct.
then you have to agree to their request. Okay, just give the loan. You cut the money.
Correct. Correct.
So in some cases it is good also, because suppose in case of home loans and all, so they give a long policy of say 20 years. They
Correct.
don't charge yearly, they charge one time premium. It is
One
not
time
that bank
payment.
insurance is bad. I'm
Correct.
not telling it is bad, but the problem is lack of education.
True.
Bank also, they don't have any good education in insurance. They simply allot anyone to sell insurance thing. And the manager, while selling insurance, selling loan, they are offering this insurance as a byproduct.
True.
And now what is happening? They are getting more revenue from insurance than their normal product.
Correct. 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 So
So they are
but
forcing you to buy.
obviously they will be promoting.
Because for a simple loan, you are getting say 2 lakh premium.
Correct.
And in 2 lakh, you are getting a hefty commission on that.
Correct.
And when they are tied up with insurance company, they are getting larger share of insurance premium.
True. True. True.
So bank education needs to be more.
And
They-
more than that, even the person who is buying the insurance should also be aware whether he is actually requiring the insurance or not.
Mhm.
So he should
No,
not be.
this is defined by the urgency.
Agreed.
If your things are very urgent, you will not mind paying anything.
It is like yes,
If you are,
boss.
yeah, if it is not urgent, or now if you are a corporate, suppose when we go for a land, we will directly tell no, we don't require insurance. If you want to pay, we have sufficient insurance, we will give you the proof. So they have to do it. So now that depends on your bargaining power also.
Bargaining power.
If you
Correct.
can
Who
bargain
is
properly, they cannot force you.
correct? Correct. So it depends on who is requiring more, whose
Uh,
requirement is more prevalent, basically. So who is ready to bend accordingly, the things flow. Yeah.
So in terms of larger players, they don't agree to their request because they have a lot of spread. So
Correct. Also,
mostly in case
they
of small
also,
loans, banks this force people to buy insurance.
because they are not much aware of the things, maybe.
They are
And
not aware,
large
and the sense
people.
of urgency is there, so they just anyhow want to get money in their bank account.
True.
So
True.
they
True.
take advantage of this, and and the problem here is they don't know what policy they are issuing.
Agreed. That is the worst
This is the
part.
again biggest challenge, because suppose for a loan, this policy would have been sufficient. Say a term insurance would have been sufficient. They are selling it an investment policy. So term insurance you could have got at rupees 10 rupees. Now they have sold you a policy worth rupees 50.
Correct.
And there is no need for that policy. Now they have sold a policy which may be valid for say 5 or 10 years. You have to pay the premium. Your
Correct.
loan was for 3 years. You have sold a policy which is valid for 5 years or
5
10
years.
years. So this is happening rampantly. And the way the business is increasing, so that's why regulators are now thinking, no, we need to put a cap. Otherwise, this will have a lot of reputation risk on the players.
So maybe IRDA would be coming up with some of the other awareness activities.
They have already come with a suggestion. They have advised banks, and RBI has advised bank that now they have specified a percentage which a bank can do from their private. For example, suppose SBI. SBI is having an insurance company, so they have specified a percentage that you cannot do more than this percentage from your parent bank.
Okay. Okay.
Suppose you
The
are a
business
subsidiary
percentage
of
of business.
SBI, you say you cannot do more than 30% business from them.
Okay.
So otherwise, what happened? They could do any amount of business they loved. So this created anomaly. So the business was not being done in a proper way.
Okay. The next one is, sir, insurance companies or officers are nowadays intentionally disallowing claims. Further, they are colluding with the hospitals, claiming fake or higher amounts. How do we control or arrest them, or maybe?
So for this, I think I spoke about this National Claim Health Exchange. So
Yeah,
this platform is
NCHS.
coming. Yeah. So there in the platform, they can upload the documents. So things would be transparent. And there was also a talk about having a health insurance regulator. So then monitor, because currently hospitals are not regulated by anyone, because
Correct.
they cannot force hospitals to do it in a particular way.
Correct.
So they have to leave it on insurance company to negotiate. For example, this public sector insurance companies, they have a body called GIPSA. So they have negotiated a special rate for the 4 public sector companies. So they don't pay more than that particular amount that they have agreed upon. But yes, this, as I told in few slides also, this space, health insurance space, the current fraudulent, this escalation of bills from hospital and intermediaries is very high. So this needs to be checked. So
Correct.
currently there is no measure, but I think government is looking into it. Maybe if a health regulator comes, this can reduce a little,
So
or
with
maybe
the
a standardized something can be done. Maybe there were talk of doing some sort of categorizing the uh, uh, mm, claims. Maybe say suppose you are in tier A cities, tier B cities, or maybe in for developed countries, for example, in Australia, you have plans like gold plan, platinum plan. So once you have, once you are in that plan, you need to be reimbursed according to the plan.
Correct.
So this challenge is there that needs to be addressed. So this will come with more with education and then proactiveness of the regulator. So we have a problem with regulator also. The regulator is not proactive at times. So
Correct.
we have a portal called Bhima Bharosa. So for any claim, you can lodge a claim there. But the problem is the tap is very poor. So once you file a claim, you do not get response promptly. Then so these things are there in bits and pieces. Problems are there. So that needs to be regulated properly.
The next one is, with the increased focus on environmental, social, and governance (ESG) practices, how can chartered accountants in India assist insurance companies in implementing these initiatives?
I think I have already talked in my slides also.
Right, right.
In environmental, social, and carbon credits, in what way we can help and advise insurers. And I think the best part would be we should not wait for the product or request from the insurer or the opposite side. We should try to create a product. We should try to create advisory services, okay, and approach. Okay, we have advisory services for this, for ESG, for carbon credit, for different sustainable practices. So all, if we come out with our product, with our features, so I think this will help to grow. We should not wait that insurance company will approach professionals to have something to have some advisory services on that. So once we get good, we can understand. If we understand the subject properly and we do with study and research, then we can create our own product and approach the stakeholders.
So basically, we are talking about solutions which we should on our own design,
We can design.
identifying the issues that are prevalent in the insurance industry.
So basically, my idea about this, the whole session was to give an overview of the industry.
Right,
So you
sir.
can gauge what are the new things coming. I think I may not have covered everything. It was
Correct.
just brief pointers. So if we go deep into it, you will try to understand what are the best solution, and you have to just identify the challenges, pain points. Once you get to that, then maybe we can offer more better solutions, and competition would be there, no issue. But we can come out with the innovative solutions which can help all people. And in fact, when we are associated so closely with banks, because we are doing a lot of bank audits and all, why not we as a chartered accountant approach bank to offer advisory services for insurance? That okay, we can
Correct.
help you in advising about this, how to bring down this reputation risk, because again, maybe in time to come, this reputation risk can affect the image of bank and their business too. So like this, we need to devise products and reach out to them in best way we can help them.
So basically, what I would summarize is, you want to say, sir, that rather than being on a cost center, we should go on the value center for the insurance business. And once we give them the value, it is definitely going to get us more and more revenue, because ultimately it is the insurance company that is coming up with business. And if it grows, then definitely we as chartered accountants and the fraternity will also grow, I believe.
Simple, you need to create value.
Correct.
You have to create value proposition. Okay, you cannot do without this. you cannot do without this audit, because if you have a cyber attack, your losses could be in crores, and the number can be very high. So why don't you opt for our cybersecurity thing, audit or risk management audit? So, but we need to develop our framework on this. How, in what way to approach. So you need to have a good study on that. Then you need to prepare some brochure, some background material for that, because when you approach, you need to be well researched on that particular topic. Then what is the need? Then you have to create their need. No, you cannot go without this. Since the risk is evolving, your whole business or whole company can be at stake. So you need need this product or need these services. So that should be in our frame of mind.
Correct. So basically identifying the areas where risk are there for insurance industries, which they are aware or they may not be aware.
May not be aware.
Providing the most valuable solutions to them, and then going up with a proposal wherein both the insurance companies as well as the CA fraternity can benefit as a whole, and at the end the community, because going with the best possible services, the insurance companies will be also in a position to provide insurance at a lower cost maybe to the consumers, and then in that way maybe the whole society can be benefited that way.
Definitely.
Right. So
And in terms of education also there is a lot of space. But you have to research for that space, and I think it would be you can definitely find it. But the thing is, you need to look out for the opportunities.
so our research and identification is the main area, and once
Yes,
maybe
yes.
you identify the areas of errors, then maybe the solutions could be flowing around it. Right?
And along with that, just go for on a regular basis, go for upgradation about knowledge in risk management, knowledge in insurance. So that will help.
Correct. Right, sir. So the question and answers are over. I would like to take this opportunity to thank you for taking your valuable time out. I would like to inform you, sir, almost more than 1,600 participants are watching this video live. So that's a great number. They have joined in through the webinar link as well as through YouTube. So 1,600 good eminent chartered accountants listening to you, and maybe they will be helping out the insurance industry
Sure.
in
And in
totality.
case of any support also, I'd be very happy to help them out. So they can reach out to me anytime. So I'll be happy to solve their queries. Maybe we had only few queries taken today. So
Yeah.
if any member has any query, they can reach out to me. We will be happy to support them.
Definitely, sir. Thank you for your time. I would also
Thank
like to once again tell the members that sir was having a medical emergency right yesterday, and today he is here with us just to fulfill his commitment and give his inputs on the insurance industry and opportunities for chartered accountants. So maybe by 2047, that is the vision of IRDA, that the whole of India should be insured. Maybe with inputs like from people like you, maybe everyone will be benefited. So I would like to take this opportunity on behalf of the PDC committee of the ICAI to thank you, sir, for once again for coming and joining us with and giving us inputs on the insurance industry, sir. Yeah, thanks a lot.
My pleasure. My pleasure.
Thanks a lot, sir. Thank you.
Thank you. Thanks all to participants also
Yeah,
for
thanks.
joining in such a large
Thank you
number.
for all the
And
participants.
because
Yeah.
insurance is a little boring subject, so it is very difficult to keep them away. So thanks everyone for going to the session.
Yeah. Thank you, sir.
Thank you.
Thank you.
Thank you.